Hello everyone, welcome to lecture 4 of module 10, in which we are going to take up the practical problems with regards to the forecasting of income statement using the percentage of sales method. In this method, we will be taking sales as a base to take up the other information provided in the question. To start with, we are having the first numerical, which is as follows, in which we are provided with the different information, and one additional information is also there, which is showing that the revenue is expected to grow by 25%. So we have to keep this in mind while we are going to forecast the income statement for the year 2024. To start with, first we go for the calculation of the percentage of sales with regards to the different information provided into the question. Calculation of percentage of sale for the year 2023 as provided in the question itself. We are taking up the amount of 2023 and then we are calculating percentage of sales of individual items given in the question. Starting with the revenue, which is our sales, it is our base, so we will take this revenue of rupees 10 lakh as 100%. Next is manufacturing expenses given for 4 lakh rupees. Manufacturing expenses, which is 4 lakh, it is to be calculated like 4 lakh divided by 10 lakhs into 100 reaches the figure of 40%. Similarly, the wages given in the question is 50,000. We compare this 50,000 with the sales of rupees 10 lakh into 100, it reaches the figure of 5%. Then we have administrative expenses, which is given 1 lakh rupees. This 1 lakh divided by 10 lakh is equal to 10%. Then another question, we are given the depreciation. Another item is depreciation of rupees 40,000. So it would be 40,000 divided by 10 lakhs into 100. We get 4% as a percentage of sale for the depreciation. Then we have selling expenses, which is given 50,000 rupees. So 50,000 divided by 10 lakhs into 100 is equal to 5%. The last is the interest expense. As we know, interest is usually treated as a fixed item, so we are not going to scale it with the sales. Now we are preparing the forecasting statement for the year 2024. For that, first we calculate the sales. Forecast of sales, which is given that it is going to grow by 25%. So we 10 lakh, we add up this 25% of 10 lakh into the amount of the sales and we reaches the figure of 12 lakh 50,000 for the year 2024. Now after computing the sales, we are in a position to go for the forecasted income statement for 2024. We are taking up particulars, amount. First we are given the revenue, that is for sales, as we just computed 12 lakh 50,000. And then we are given direct manufacturing expenses, which were 40% of sales. Now we calculated 40% of 12,50,000, which comes to 5 lakh rupees. This is a direct manufacturing expenses, so it has to be deducted from sales. The next item we are given is wages, which was 5% of 12,50,000. It comes to 62,500. So we got the figure of gross profit here, which is equal to 6,87,500 rupees. And out of this gross profit, we deduct the first expense, that is administrative expenses, which is our operating cost. Administrative expenses, which is given as 10% of sales, 1,25,000. Then we are given another depreciation. Depreciation was just 4% of the sales, so we compute 4% of 12,50,000, which comes to rupees 50,000. Then in a question, we are provided with the information of selling expenses, which was 5% of sales. It comes to 62,500. Now you can see we have to deduct the administrative expenses, then depreciation, and then the selling expenses. After deducting all these three, we got a profit which is known as to be our operating profit, or in other terms we call it earning before interest and taxes, amounting to rupees 4,50,000. As I told you earlier that interest is assumed to be fixed. So now we will deduct out of EBIT, we deduct the interest expenses, which is given in the question, and we taken it as fixed as usual because we are not going to scale it every time. This is 30,000 rupees to be deducted. So we got a figure of 4,20,000, which is our profit before taxes, or I can say PBT, profit before taxes, 4,20,000. And out of this we are given in a question the tax rate at the rate of 25%, which we compute on 4,20,000. It comes to the figure of 1,05,000. 25% of 4,20,000, 1,05,000. So we got the balancing figure of 3,15,000. This is going to be our projected net profit after tax for the year 2024. Similarly, now we are going to take up another question to calculate the percentage method, or to use the percentage method for forecasting our income statement, in which we are having certain additional informations like number of units to be sold is expected to increase by 10,000 units, and the selling price is expected to decline by 5%. Salary is expected to increase by 10%, whereas the selling expenses are expected to decline by 10%. So taking up this information for the year, we are going to make a projected income statement for the year 2023 using percentage of sales method. So first we take the base year, that is our 2022. So the sales in year 2022, 30,000 units as given in the question at the rate of 40 per unit. 30,000 units at the rate of 40 per unit. We got the total sales revenue equal to 30,000 into 40, that comes to rupees 12 lakhs. And now we are going to calculate the cost structure, or we calculate the base year figures on the basis of sales. So we take up the different particulars and their related amount and calculate the percentage of sales, where our base sale is 12 lakh rupees. So moving with this information given in the question, first is material consumed, which is given 1,20,000 divided by 12 lakh into 100 is equal to 10%. Then direct manufacturing expenses, $4,80,000. Same manner, divide each and every individual item with 12 lakh rupees. So we calculate the percentage, that is 40%. Next item given in the question is wages, 40,000 rupees divided by 12 lakh into 100 is equal to 3.33%. Amount, percentage of sales. Next item is salaries, 84,000 rupees divided by 12 lakh is equal to 7%. Then we are given depreciation, 40,000 divided by 12 lakh is 3.33%. Then we have selling and distribution, which is 60,000 divided by 12 lakhs. It comes to 5%. Then again we are given the financing cost. So here the financing cost we are going to take up as a variable expense because it is not interest. So we are taking financing cost, which is again 40,000 rupees to be divided by 12 lakh into 100 is 3.33%. So now we are given certain additional information, and taking up those additional information, it shows in the year 2023 there will be the unit increase in sale, which is 30,000 in the past. In the year 2022 we add up this 10,000 increase in the unit, so we got a new figure of 40,000 units to be sold in the year 2023. And the selling price changes shows that there is a decrease of 5% in 40 rupees. So we got the new figure of rupees 38 per unit as our selling price. So our new sales revenue for the year 2023 would be 40,000 units to be multiplied by 38 rupees comes to 15,20,000. More information provided in the question regarding the additional information, like salaries is expected to increase by 10% and selling expenses expected to decline by 10%. So we take up change in salaries, which is going to be increased by 10%, We just computed that the salaries is 7%. So we add up 7% into 1.10, which reaches the figure of 7.70%. Similarly, there is a downfall or decline in selling expenses by 10%. So the selling expenses we just computed is 5%. So we take it by a reduction of 10%, mean 90 paisa or 90.90, it comes to 4.50%. So going to the projections, now we prepare the income statement for year 2023, which is going to be the projected statement. So taking up the items one by one, first we take up the sales or the revenue. We just computed 40,000 units to be sold at a rate of rupees 38 per unit. So it comes to the amount of 15,20,000. This is our base. Then next information is material consumed, that is to be deducted. So we calculate the material consumed. As we know, it is given 10% of sales, which is going to be 1,52,000 for the year 2023. Then we have direct manufacturing expenses, which is 40% of 15,20,000. It comes to the figure of 6,08,000. Then we have wages in the question. As there is no change in the wages and wages are just 3.33% of 15,20,000. So we got the figure of 50,660. So when we deduct these expenses, we will reach the figure of gross profit. Moving ahead, we have a salaries there, which we given as an additional information that there will be an increase of 10% in the salaries. So we take it as 7.70% of 15,20,000, which is coming to the figure of 1,17,040, 1,17,040 rupees. Then we have no change in the depreciation, which was 3.33% of 15,20,000, coming to the figure of 15,616. Then next is selling and distribution, or the selling expenses, which we are given that there will be a downfall of 10%. So it would be 4.5% of 15,20,000. So it comes to the figure of 68,400. And last is given financing cost, which is 3.33% of 15,20,000. It comes to 50,660. So after deducting all the expenses from the sales revenue, we reach the figure of PBT, that is profit before taxes, which is 4,22,712. As given in the question, the tax rate at the 25% of 4,22,712 is coming to the figure of 1,05,678. So we can calculate the net profit after taxes, that comes to the figure of 3,17,034 rupees. This is how we compute the projected income for the upcoming year 2023 using 2022 as our base year. Now I am taking up the question number 3, in which we are going to frame a projected income statement for the year 2023 using percentage of sales method, as the information provided in the question regarding sales, material consumed, direct manufacturing expenses, wages, salaries, depreciation, selling and distribution, financing cost, as well as the tax rate. Considering the additional information provided, it says that the average annual growth rate in the sales is 25% and the variable expenses are expected to increase by 10% per every year, and financing cost is expected to grow at the rate of 5%. So before solving any information, we have started with the what are given in the question information and going to project the same. So first, in the first step, I am going to prepare the information for the projected sales for the year 2023. As you can see in the question, that sales already given in the information is of rupees 6 lakh, and additional information shows there is a growth rate of 25%. So our projected sale for 2023 would be 6 lakh plus 25% of 6 lakh, which is equal to rupees 7,50,000. Now moving to the step number 2, we have to find out the projected expenses. In the question, we are given information that there are certain expenses which are variable. They are expected to grow at the rate of 10%, and no information is provided about the fixed expenses. So first we distribute the expenses into two categories. One we will take as a variable, another is the fixed. And here in the question, I am going to take the fixed expenses which are showing no change, like salaries. It is one of our fixed expense. Another we will take is the depreciation, as no information is provided regarding the depreciation rate and the fixed assets in the question. And third is financing cost, which is assumed to grow as per the question at the rate of 5%. So we are putting it in the fixed expenses category. Now talking about the variable expenses, all the left out expenses we will consider as the variable, and we will have a growth in all the expenses at the rate of 10%. So now we are going to calculate projected variable expenses for the year 2023. The first variable expense, and then we calculate its percentage of sales of our base year, which is 2022, and then we are going to find out the projected percentage for 2023. Taking up all the expenses individually, first we take up the material consumed, which is given in the question 2 lakh rupees. As the sale is given 6 lakh, so we calculate 2 lakh divided by 6 lakh into 100, that is 33.33%. And as given in the question, there would be an increase of 10%, 33.33% plus 10% of 33.33, which comes to 36.67% of sales for the year 2023. The next is direct manufacturing expenses. For the year, it is given 1,80,000. Again, we calculate as a percentage of sales. Comparing this 1,80,000 with 6 lakh, we reach the figure of 30%. And by adding up the growth of 10% in the same, the projected expenses would be 33% for the year 2023. Similarly, another variable expenses, wages, which is given 60,000 divided by the sales of 6 lakh, it comes to 10%. 10% of 10%, which is equal to 11% here. And then the next is given selling and distribution, which is 80,000 rupees divided by 6 lakh, comes to 13.33%, and after adding again the 10% of the same, we reaches the figure of 14.67%. Now, given the projected framework for the year 2023, we will compute all the expenses individually now. Projected variable expenses for 2023 as percentage of sales, which we know we just calculated would be 7,50,000. So first we go with the expenses, then percentage projected for 2023, and then amount. First is material consumed. As I told you that we will consider 36.67% here. So we put it here 36.67%, and we compute this 36.67% of 7,50,000, which is our projected sale. So it comes to rupees 2,75,025. Similarly, direct manufacturing expenses. As we computed, it is going to be 33% of 7,50,000. It will be 2,47,500. Then wages, 11% of 7,50,000 comes to 82,500. And next is selling and distribution, which is 14.67% of 7,50,000. It comes to 1,10,025 rupees. So now we know what is going to be our expenses, variable one. Now we take up the fixed expenses. which I told you earlier. It includes the salaries as a fixed expenses. So it will remain unchanged, mean 1,20,000. Similarly, the depreciation to be kept unchanged, amounting to rupees 60,000. And the next in the row is financing cost, which is given in the question that it will grow at the rate of 5%. So what we do is we take the base year figure of 20,000 and then increase it with 1.05, which comes to rupees 21,000 for the year 2023. Now, after computing all the components, we are in a position to go for the projected income statement for the same. So now we will prepare projected income statement for 2023, dealing with every information that we have just calculated. So I'm taking particulars and amount in consideration. The first we computed or we calculate for the income statement purpose was sales. The new figure of the sale we calculated 7,50,000. Out of this sales, we first deduct the different variable expenses which are showing a growth of 10%. First one was material consumed, that we just calculated 2,75,025 rupees. Second was direct manufacturing expenses, amounted to rupees 2,47,500. Next in the row is the wages, 82,500 rupees. Then selling and distribution, expenses, which was 1,10,025. So as you can see, these are the variable costs. So after taking their total, we are in a position to calculate total variable cost. The total of these four items will be 7,15,050 rupees. After deducting these variable expenses from sales, we reach the figure of 34,950. This is sales minus variable cost. Then after that, we will consider the different fixed expenses as we just computed. Salaries 1,20,000 as given in the question without any change. Then the depreciation amounting to rupees 60,000. And the last is what we get when we compute this. We reach the figure of another negative, which we can put under the heading of operating profits, which would be 1,45,050 rupees. Now we deduct the financing cost, which is showing a growth of 5%, and it comes to rupees 21,000. So now we can have profit before tax, which is 1,66,050. Actually, it is not a profit, it is a figure of loss. When there is loss, there is nothing called to be deducted in the terms of income tax. So our figure is net loss to the company, that is 1,66,050 rupees in this question. So this projected income shows a loss that is just due to the fixed expenses remaining constant while the variable expenses are increasing or decreasing, but despite of the increased sale, the variable cost is also increasing, but there is no change in the fixed cost as such. With this, I come to an end of this lecture. Thank you so much. Thank you for your kind attention. Thank you.